The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Welcome to another edition of Breakout Investing on TFNN. Now 5 days a week from 3 to 4 Eastern. Ken Shreve with you. Thanks very much for tuning in. As always, you can follow me on Twitter at Ken Shreve. And if you want to call me, talk about this market, you can do that by calling 877-927-6648. If you can't listen to the show live, no worries. Head over to iTunes. You can get the show as a podcast over there, and all my shows are archived on TFNN.com as well. If you want to listen to this program on your smartphone, just plug those earbuds in, open your smartphone browser, type in TFNN.mobi. Very intuitive. Just type in TFNN.mobi, click Listen Live, and you can hear the stream that way as well. I'll be going over charts on the show like I always do. If you want to look at those charts live right along with me, you can do that at TFNN.com. Tiger TV, the show is carried live on Channel 1. It is archived on Channel 13, and Tiger TV is also viewable on your handheld device as well. All right, let's take a look at this market. Story today is about the VIX, the CBOE Volatility Index, up 7.4% right now to 1506. Big day for the VIX, trading up near its session high. That is weighing on the market, just a little bit. Let's take a look at the NASDAQ composite here. Last check, it was near its session low. Pretty nasty reversal here, down almost 13 points, 0.4% to 3,063. It hit an intraday high of 3,100, but has reversed in rather spectacular fashion here. Let's see what is fueling the decline here in the tech index. The story in Apple, kind of a bearish day in Apple here. Stock is down $10.95, 1.7% to $654.20. Now, it's not so much a 1.7% decline in Apple that is a concern, but the volume you can see down here. Apple was under some mild accumulation on Friday, was also under additional accumulation on Monday as well, just yesterday. Good, solid, above-average volume price gains. Stock was definitely getting jiggy here, but you have volume today right around 26 million shares, which is much higher than it was yesterday and higher than it was Friday as well. So definitely some big sellers in Apple today. Stock has made a tremendous move in price, no doubt about it, since late July, so a little bit of profit taking. Not out of the ordinary today, but this is a heavy volume reversal, which frankly is a bit bearish. I am currently long this stock in my Ultimate Growth Stocks model portfolio. I'm not going to sell just on one day of weakness, but certainly its price action today has me a little bit concerned. Again, the big volume is the main concern here. So Apple underperforming the market fairly dramatically today, down 1.7%. to 654.20. Let's check in on shares of Google today because it has come hard off its high as well, trading in the bottom half of its range, down 1.4% to 666.40, down $9.14. Similar to Apple, Google has made a tremendous move in recent weeks as well. Volume in the market today. Let's see, yesterday on the New York Stock Exchange, volume was very light at 548 million shares. Today, let me just get a check and see where the volume is. And we are tracking about 15% higher on the New York Stock Exchange today. So very, very light yesterday, Monday on the NYSE at 548 million shares. We're tracking about 15, maybe 20% higher than that today. So a little bit of institutional selling in the market. No need to throw in the towel yet here, but we'll pay attention to the weakness today. NASDAQ volume yesterday also below average at 1.43 billion. It is tracking about 5 to 10% higher today as well. Coming up later in the program, folks, at 3:30 Eastern Time, going to be joined by my good friend Bob Lang from ExplosiveOptions.net, a colleague of mine over at RealMoney.com, the street savvy options investor, golf partner, all that good stuff. We'll get him on, talk about the Fed minutes tomorrow, strength in gold, and a whole lot of other market topics. So he'll be on just a little past 3:30 Eastern. We'll look forward to having him on. Okay, let's take a look at the S&P 500 here. So we got weakness in tech stocks. S&P 500 now reversal here too, down close to 6 points, 0.4% to 1412. So definitely some selling pressure. I mentioned in the market yesterday, it was kind of a very lackluster day, and the major averages kind of didn't move much in either way. But there was definitely some selling underneath the surface. Several growth names were underperforming the market fairly dramatically. And again, just talked about Apple a few minutes ago. Pretty bearish reversal in that stock today as well. So definitely something to keep an eye on here. But like I've been saying in recent shows, if we go back and take a look at a weekly chart of the S&P 500 here, weekly chart always gives a little better perspective. Let me pull this up in Tiger TV here. There it is, gosh. So we've got six straight gains, and what looks to be a possible breakout taking shape for the S&P 500 here. Again, looking in Tiger TV, you can see the U-shaped formation here, the S&P 500 trying to break out over this trend line here, but you know, it's not uncommon to see a little bit of a shakeout here. So this is an important point to reiterate. If you look at the S&P 500's 10-week moving average, which is currently at 1378, at its current level of 1412, you're only talking about a 2.5% pullback for the S&P 500 to get down to this support level. So after, you know, a 5 or 6% move off the lows to come in to 2.5%, really doesn't seem like a whole lot. So we could conceivably see a little bit of a shakeout here before a breakout. If the S&P 500 does come all the way down to its 10-week moving average, which again is only going to be a correction of about 2.5% from its recent high, I would expect that the selling would be fairly short-lived. I think there's still enough decent stock charts out there that could help move this market higher eventually. But maybe we see a little bit of a shakeout here. If it happens, I'm not expecting anything severe. So at this point, a pullback for the S&P 500 to its 10-week moving average at 1378 seems like a reasonable possibility. All right, talked about Google down hard today. Some other growth stocks under pressure here. Let's take a look at shares of Stratasys. Stratasys having a rough day. This is an extended stock. There's no question about it. Mentioned it on the show yesterday as one not to chase after a recent breakout over $55 a share. Here was its breakout back in July. So it was very, very extended. You don't want to chase stocks like this. But shares of Stratasys getting hit pretty hard today, down $3.13, 4.4% to 68.85. Haven't checked in on the financials lately. Let's see how the XLF is hanging in there as indices trade near their session lows. And yeah, you've got some selling here as well after strength. The XLF is only up 3 cents now to 15.20 after hitting an intraday high of 15.38, trading in the right at the bottom of its trading range today. So XLF over the past 13 sessions, it's still on pace with a 3-cent gain. Right now, it's on pace for 11 up days in the past 13 sessions. So there's no doubt money has been coming back into financial stocks. But after some heavy volume declines back here in July, you can see there's really hasn't been any conviction at all behind the buying in recent weeks. So still kind of a shaky foundation here for the financials. No conviction behind the buying. Not clear to me that financial stocks are under meaningful accumulation at this point. Let's check in on shares of Wells Fargo. That's a top holding of the XLF. It is trading in the bottom half of its range. Still up 27 cents, outperforming a little bit, up 0.8% to 34.34 after hitting an intraday high of 34.76. Technically, Wells Fargo chart looks pretty darn good here. No real warning or alarm bells sounding in Wells Fargo. Let's check in on J.P. Morgan Chase, another top holding of XLF. After early strength, it is still outperforming today, but near its session low, still up 44 cents, 1.2% to 37.81. Still holding above its 200-day moving average here, but still far off its 52-week high. So even if J.P. Morgan were to, get back into rally mode here, a lot of overhead supply to work through as it, if it is indeed going to work its way higher. And then finally, Bank of America, probably the fourth highest weighted stock in the XLF. You can see all these charts look pretty similar. B of A has rallied nicely after hitting a low of around $7 a share back in July. It is up 3 cents to $8.18. Very similar looking chart to J.P. Morgan. Out of the three financials we just looked at, Wells Fargo looks to be certainly best of breed at this point. Some small cap financials acting well in this market. Susquehanna Bank Shares. This is a Pennsylvania-based bank showing relative price strength in the market. A picture of technical health before today, but boy, you're seeing a lot of stock charts that look like this in the market today. Reversals after early strength. So when you're gauging market health, you always want to let price and volume trends, not only in the market but in individual stocks, be your guide. Susquehanna Bank Shares, strong balance sheet here, small cap name, but good earnings and sales growth in recent quarters. A reversal today, now down 5 cents to $10.76, hit an intraday high of $11.04. So kind of ugly price action today with Susquehanna Bank Shares. And let's also take a look at another little known name here, BBCN. This is a bank that caters mostly to the Korean community, but spectacular reversal in this name as well, down 4 cents now to $12.48 after hitting an intraday high of $12.89. So definitely some sellers in some of these small cap financials that have been doing quite well lately, both BBCN and Susquehanna. Well, not so much Susquehanna, but BBCN definitely extended after a recent breakout here over $11.50. This is what an extended stocks look like. You wouldn't want to have chased it all the way up here, but this reversal today tells me that the stock is probably going to consolidate gains for a little while. I'd like to see a little base form here and maybe pick this thing up on renewed signs of institutional buying. So financials not looking too bad, though many have reversed today. Still a decent area of leadership in the market. Taking a look at crude oil today, up 0.7% to $96.68 a barrel. Gold up $19.90. We're going to get Bob Lang's take on the performance of gold today. What does it mean? Is gold a buy here? But up $19.90, 1.2% to $1,642.90 an ounce. That's the highest level for the front end contract since early May. Interesting to see indices near their lows today, with the U.S. dollar index acting as weak as it is. 81.87 last on the U.S. dollar index, down 59 ticks. That's almost a loss of about 0.7%. Let's check in on the dollar index here. This is as of Monday's close. You can see it's stuck underneath its 50-day moving average here and under more pressure today. All right, folks, headed into the first break. Thanks very much for tuning in. Ken Shreve with you, Breakout Investing. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing. Just finishing up this thought on the U.S. dollar index here, under quite a bit of pressure today. So dollar week still stuck underneath its 50-day moving average, you can see here, and at 81.87 looks to have taken out some key support levels today. Its 50-day moving average is at 82.65. I still think the story in bond yields is an interesting one. I said as much in my weekly update earlier today. Ultimate Growth Stocks is my weekly newsletter at TFNN. If you want to get a trial to Ultimate Growth Stocks, you can do that right on the homepage of TFNN.com. You can see Ken Shreve's Ultimate Growth Stocks right there. You get 30 days free to check out my approach to the market, which is a top-down approach to the market. I pay a lot of attention to overall market health. I try to buy stocks during market uptrends, raise cash when I start to see signs of a downtrend taking shape. So what I know right now is that the market is in an uptrend. I've been putting money to work. Still have a fairly, probably only about 50-60% invested at this point, but have some names that are working. So if you want to see what stocks I'm looking at in this market, be sure to check out 30 days free of Ultimate Growth Stocks at TFNN. Let's take a look at the yield on that 10-year note. Again, it got up to about 1.86% today. Right now at about 1.8, and you can see this 200-day moving average, I should say, looks to be a meaningful resistance level here. So does that mean that bond yields are destined to back off here? I think it just raises the probability that we could see some weakness in yields here after early strength. Again, the 10-year yield has reversed after early strength, and same with the 30-year bond as well. That's TYX here on StockCharts.com. You can see it hit an intraday high of 2.98%, now at about 2.91%. So 30-year bond also facing some resistance here at its 200-day moving average. Economic data tomorrow. We'll talk to Bob Lang in just a few minutes about the FOMC minutes. They'll be out tomorrow. The existing home sales data for July will also be out tomorrow. Economists are looking for existing home sales of 4.55 million units versus 4.37 million in June, so looking for a nice increase for July. Thursday, we have weekly jobless claims. New home sales data also due Thursday. New home sales expected to come in at 368,000 units, up from 350,000 in June. So let's check in on one of my favorite ETFs here, the iShares Dow Jones U.S. Home Construction Index Fund. After a recent breakout here, over $17 a share, under quite a bit of selling pressure over the past two sessions, down another 1.4% today to 1742. Back to within buying range here, but I'll tell you, the home builders could be looking a little bit vulnerable here. I think if you're long, which I am not right now, you're just going to have to see how how ITB trades over the next few days. Lennar, another strong performer here. Recent breakout in decent volume under selling pressure, quite a bit of selling pressure for the past two sessions here, down another 2.2% today to 31.17. So looks like the home builders might be ready to take a little bit of a breather here ahead of existing home sales tomorrow and new home sales data on Thursday. Let's take a look at a couple of story stocks here. Shares of Nordson. This is a company that makes adhesives and industrial coatings. It is having a good day today, up 10.2% to $60.60, trading right in the middle half of its range today after hitting an intraday high of $62.44. Nordson, nice breakout over $59 a share. Let's look at the weekly chart here, and you'll see this nice technical breakout for Nordson today. There's been no shortage of technical breakouts in this market in recent weeks. There's no doubt about that. Let me find this Nordson here. There it is. Okay, and you can see the good, strong, heavy volume breakout. Here was the base that started earlier this year, back in January, February, thereabouts. But a good breakout today, over $59 a share. Earnings were up 31% from a year ago to $1.06 a share. Sales were up 22% to $380 million. Sales at its adhesive dispensing systems division rose 14%. Big jump at its advanced technology systems unit. Sales were up 37% there. Industrial coating sales up 9%. So heavy volume breakout for shares of Nordson today. Bullish move indeed. And let's check in on shares of Best Buy. At last check, Best Buy down sharply, down 3.6% today to $17.50. Well, we'll talk about Best Buy a little bit later in the program. But coming up next, Bob Lang from ExplosiveOptions.net. He'll join us when we come back. You're listening to Breakout Investing on TFNN. Ken Shreve with you.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Before we went into the last break, just talking about shares of Best Buy under more pressure today, down 3.5% to $17.53. You might remember yesterday the company named Frenchman Hubert Joly as its new CEO. Investors did not like that news at all as the stock crashed below its 50-day moving average during Monday's session. Joly is the former head of travel and hospitality firm Carlson, which owns the Radisson Hotel chain and TGI Fridays. Stock is under renewed pressure today after the Best Buy earnings disappointed. Earnings were down 49% from a year ago to 20 cents a share. Estimates were for 31 cents a share, so big miss there. Top-line growth was also disappointing, fell 3% to about $10.5 billion. That was slightly below expectations as well. Best Buy also withdrew its earnings guidance for the year. So first thing I want to ask, we get Bob Lang on the phone here from explosiveoptions.net. Bob, a good friend of mine. Always like to have him on to provide some market commentary. And Bob, I want to get your take on Best Buy. A lot of people are trying to catch this stock on sale right now. What do you think about catching a name like this on sale? Is there all the bad news priced in here, or is there more downside ahead, do you think?
Well, Ken Gray, always great to be with you in the afternoon here. The thing about Best Buy is this, is that I would tend to look at some of the other competitors. Something like Amazon.com is the one that's being there to take share away from Best Buy. I think the brick-and-mortar type outfits like Best Buy are probably going to be falling by the wayside, much like we saw Circuit City just a few years ago. I mean, it wouldn't be surprising to see that. I mean, obviously they have a lot of stores out there. There's a lot of inventory. But, I think the Amazon, as an example, even Walmart.com are taking a lot of share from them, and because they have a better pricing structure than Best Buy does, just simply because they don't have these big box stores, Amazon being the one for that. I think Best Buy's in trouble. I really do.
Well, they've been shutting stores, and again, it's pretty much the same kind of business as Circuit City was, and that obviously did not end very well for Circuit City. I happen to agree. They're closing a lot of stores, and they're just getting their lunch eaten by Amazon and Walmart, and I think you'd have to throw Target in there as well as another big retailer that has pricing power, and they sell a lot of electronics as well, basically the same market as Best Buy.
I think one of the things you can really, a huge tell for what was going on for this quarter was the fact that it was just a couple of weeks ago that the founder, Richard Schultz, I believe it was, had come up with some kind of a scheme or some kind of a plan to buy out the company either through a leverage buyout or what have you, or has some bankers help them out. And the stock popped into the 20s, and it fell right back that same day. So apparently the market didn't believe that was the case. And who knows? Maybe he did that because he felt that the company is not being valued properly. But I haven't seen many others other than him stepping in front to come to the plate, even as the stock is sitting at multi-year lows. Have you?
No, can't say that I have.
So anyway, well, I think that for the, by and large, Best Buy has it's probably its best days are behind him. And look, I mean, we always say that as a cliche, and some of these companies, they get rejuvenated. I mean, Apple being one of them, they start over again. But I think, in this day and age, it's going to be difficult for them to compete with what's out there.
So, Bob, big move in gold today, up close to $20 an ounce. Is this the start of an uptrend for the GLD here? What's your take on the gold here? Continued weakness in the dollar. Is there a trade here for investors, do you think?
Well, it's interesting that I did some charting and put some stuff on Real Money earlier this morning, Real Money Pro, about gold and the GLD chart, and it looked like GLD for me, anything at break over 158 on the close was going to be pretty bullish, and I think it's a breakout to the upside. It's not going to be a straight line, but certainly I think gold can get on up to it's around 1610 roughly right now. It's got $1,700 in its sight.
Yeah, there's no doubt about it. I'm looking at a chart of the GLD right now in Tiger TV, and currently trading around 158.78. So it did pop over some resistance today. It is trading near its intraday low after hitting a high of 159.20. I use moving averages a lot, Bob, as you know, and the GLD is still trading underneath that 200-day line at 160.25. So that still looks like it could be a resistance level for now, but definitely gold is not looking too bad here. Bob, let me talk about the Fed minutes. We've got the Fed minutes coming out tomorrow, I believe. What does the market want to see, if anything, from these minutes? Any surprises in store, or what do you think the market wants to see in these minutes tomorrow?
Well, to be honest with you, Ken, I really think the market wants to yawn at these minutes. They really don't want to see much at all. In fact, I think we got pretty much what we meant, what was meant from the minutes in the last press conference that Bernanke had. And other than the fact that they're probably going to talk about some of the worries that were in place a few weeks ago with Europe, because let's remember that Draghi came out with their ECB statement a day after the last Fed meeting. So, I really don't think the market is going to be looking for much. Obviously the equity markets have improved markedly since then. So, frankly, 3 weeks is an eternity when it comes to Fed minutes and Fed attitude. I mean, things change daily, possibly even hourly from what they're going to consider. So, obviously, bond yields are up from where we were just a few weeks ago. Equity markets are up, and inflation really hasn't changed a whole heck of a lot. We still have this nagging jobs picture, and that is really right now front and center the focus of what the Fed is worried about.
So here's the question: with the dollar's very weak again today. It was down about 0.7% at last check. So you've got the dollar that looks like it wants to go lower as opposed to higher. U.S. dollar index recently around 81, 87. You've got strength in gold. Has the market all but priced in action from the Fed on September 12th and 13th, as well as action from the ECB? I mean, is there a chance that the Fed may not do something at their September 12th and 13th meeting, and hasn't the market already priced in more easing from the Fed? What's your take on that?
I think what you just said, the latter is pretty much the case for me. I think the market is probably trying to price in something. Look, I mean, when let's just go back to a few weeks ago when Draghi came out and said, we will do whatever it takes, okay? The markets ran up on that Thursday after dropping early Thursday morning pre-market. He starts talking, the market took off, and then followed through on Friday. And what happened the following week when they came out with their statement? There was a lot of disappointment because they weren't going to do anything on that particular day. It was never his intention to do that. So I think, yes, you're right, the anticipation that something is going to happen is already built into the market. So if nothing does happen, you're going to see the market flipping following those meetings. Probably even Jackson Hole at the end of this month.
Gotcha. So weakness in the dollar, commodity space, oil. Is it coal stocks that you're kind of keen on here, Bob? You sent me some notes. Are there some coal names that you're looking at here?
Yeah, one of the best ones that I have, and I own stock in Arch Coal, which is symbol is ACI, Apple, Cherry, Indigo.
Right.
I like that one. It's a $7.50 stock, roughly. And, there's a couple other names in the space. CNX is another one that looks good, BTU, Walter Energy, WLT. Look, these stocks are moving today. There was some sort of a U.S. court case that said that President Obama had said that he wanted to curb some pollution against the coal companies, and that was basically rejected or thrown out. So these companies are all benefiting from that case. But all in all, look, I mean, as natural gas goes up, coal becomes cheaper to use as an energy source, and if natural gas keeps rising, we'll see these stocks start outperforming that group altogether.
Now, with your expectation that coal could continue to do well here, is your expectation that with the weak dollar that not only could continue to help gold prices but also oil prices as well? Are there any energy names, oil names in the sector that you're looking at now?
Yeah, that's exactly the case. I think oil names have been extremely strong, and they're going to be probably going to continue to go well. I was looking at the chart of oil just a week or two ago, and it looked like 98 to 101 was really a magnet on oil, on crude oil. That's where it seemed like it was going to. But, as far as names in the space, oil service names, I really like Schlumberger, SLB, Rig is an alternative play as well, too. ESV is one that I've spoken about several times, and National Oil Well as well, too, in the drilling space.
Well, what's interesting about Schlumberger, we're looking at a chart of Schlumberger in Tiger TV right now. Big move off the low starting in late June when it was trading around $60 a share. It's now a $74 stock, but I like the fact how it is just moving sideways here, holding on to its gains. So Schlumberger has a fairly intriguing technical picture here. I would agree with that as well. And Transocean, another name that Bob mentioned, big move up for the stock last week, kind of holding on to its gains here. So Rig looks interesting as well. What about the, before I let you go, Bob, what about the financials? I was talking about the fact that the XLF is up some 11 sessions out of the past 13, not seeing much in the way of accumulation in the financials, but their money seems to be going into this sector. Is this another feather in the bull's cap? I mean, if the financials continue to act well here, this should be a catalyst for the market. What's your take on the financials?
Well, generally speaking, I'm an options guy, and I buy some very, very large option trading on the XLF over the last couple of weeks. There's been some strong option call buying in the some of the at the money or out of the money options. So that is indicative of somebody making a large bet on higher prices in the XLF. Now, regardless of what the fundamentals are, I'm just telling you, when there's money being placed in a very, very large spot on some option trades, that when the big money is flowing, that is where I tend to focus in and concentrate and pay attention, because that's somebody's looking for a big move there. So yes, you're correct.
Good deal. Well, I follow the same sort of strategy for ultimate growth stocks, looking for unusual volume in certain stocks. Bob, what do you make of the I don't know, I'd call it strange price action in Apple today? Some big volume selling in the stock. What's your take? If people are long Apple, should they be thinking about taking profits here? I mean, the stock has been in rally mode. Big volume today, about 27 million shares, well above average. Looks like some institutional selling in the stock. Something to be concerned about up here?
Not really. I think that having the stock having been up close to 7 to 8% over the last 4 to 5 sessions, it was due for a breather. And look, the stock's at $670 earlier this morning. It was time for some people to take some profits. And the first ones out the door generally tend to shake the trees a lot the hardest. So I see nothing wrong with Apple. This chart is very constructive, and I'm still long in my service the October 700-750 call spread that we put on over about a week and a half ago.
Yeah, I am too. I've been in Apple for a little while here. I told listeners earlier in the show one day of selling is not gonna make me just close my position and take profits. A little concerned about the size of the volume today, but we'll see how things play out over the next few days. Folks, Bob Lang runs a great website called explosiveoptions.net. If you want information about Bob's service, just go to explosiveoptions.net. Read what he writes about in terms of the market. Bob, always a pleasure to have you on the show. Have a great day, and we'll talk to you soon.
Thanks, Ken. Always great to be with you. Take care. Have a great day.
All right. Take care, buddy. All right, Bob Lang from explosiveoptions.net. And if you want to see what Bob does, go check out his website. Pretty savvy options player, and a guy that I've known for a long time. All right, we've got a couple minutes left to go in this segment. Let's check in on some other movers in the market here. Shares of Urban Outfitters. Nice earnings report. Here we have a lot of stocks trading near session lows. Not Urban Outfitters, up $5.73 today, 18.3% gain for URBN to 37.01. A lot of raised price targets for this specialty retailer today. I remember the company rehired co-founder Richard Haynes back in January to go back as chief executive officer. That move appears to be paying dividends. Earnings up 20% from a year ago to 42 cents a share. Sales up 11% to $676 million. Sales at Urban Outfitters namesake stores accounted for close to 50% of the company's sales in the quarter. Sales at Anthropologie increased 3.4% to $281.8 million. Sales at Free People rose 26% to $73.8 million. So obviously a nice little turnaround going on here at Urban Outfitters. R.W. Baird raised their price target to 39 from 32, and several other raised price targets as well from other brokerages. Outstanding earnings from Urban Outfitters. Stock under serious accumulation today, up 18% to 37.01. All right, folks, we'll check out some additional earnings reports when we come back. Some interesting stocks out there moving as well. We'll do that in about 3 minutes. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, completely free of charge. We'll even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday at 11 a.m. Eastern on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
About 6 minutes left to go in Tuesday's session here. Let's check on the major averages. Right now, the Dow underperforming a little bit, down 71 points, 0.5% to 13,200. The NASDAQ Composite down 11 points, almost 0.4% to 3,065, and the S&P 500 down 5.5 points. Call it 0.4% to 1412. So mild distribution in the market today. It looks like volume is going to come in a little bit higher than what we saw yesterday, so that would be a distribution day or higher volume decline for the indices. But you know, again, after 6 straight weekly price gains for the S&P 500, no one should be surprised to see a little bit of selling, a little bit of profit taking. To Bob Lang's point, who I just had on the program from explosiveoptions.net, yeah, some selling in Apple today, but this is a stock that has moved up off its lows sharply. You know, some selling in the stock does not mean that you have to run for the exits here. The market trend is upward until proven otherwise. So let's ride this trend for as long as we can. Taking a look at shares of DSW today, also outperforming nicely on strong earnings, up 4.8% to 64.19. DSW earnings were down 11% to 66 cents a share. Sales were up 8% to $512.2 million. Both the earnings and sales were above analyst expectations, so the stock is benefiting as a result. Same-store sales in the quarter up 4.2%. DSW's board also approved a quarterly dividend of 18 cents a share. Let's take a look at a weekly chart for DSW here, and we'll see a nice little breakout recently over 61.99. Call it 62, so the stock is at 64.32 right now. Starting to get borderline extended, but still to me looks like it's within range here. I don't think you're chasing and buying an overly extended stock here. Remember, the rule is you don't want to buy a stock when it moves more than 4 to 5% past a swing point. So the swing point for DSW, 61.99. DSW recently trading at 64.32. So nice quarter there. Take a look at shares of Daktronics today. DAKT. Daktronics also reported earnings were up 100% from a year ago to 16 cents a share. Sales were up 12% to $132.9 million. The company makes scoreboards, digital displays, and the like. But a big day for this stock, up close to 18% to $9.49. Interesting, when you look at earnings estimates this year and next year for Daktronics, you're looking at a company that really is expected to ramp up growth here. In 2011, or excuse me, fiscal 2012, they made 20 cents a share. They're in fiscal 2013 right now. They're expected to make 31 cents a share. That would be up 55% from 2012. And then in fiscal 2014, they're expected to earn 44 cents a share. That would be up 42% from fiscal 2013. So annual earnings growth rates of 55% and 42%. A little bit of a growth story here that might be worth paying attention to. Stock outperforming nicely today. DAKT, Daktronics, up 18% to $9.49. And let's also take a look at CHD. This is Church and Dwight. Stock is outperforming today, up 5% to $55.69. They acquired Avid Health today for $650 million. That's a company that makes gummy vitamins for adults and kids. Church and Dwight not only acquired Avid Health, but they also raised their earnings forecast for the rest of the year. And the stock is benefiting as a result. So that's a look at Church and Dwight. All right, coming up after the close, we've got some tech earnings, Analog Devices, ADI. We've also got Dell scheduled to report earnings, Intuit, and Williams-Sonoma. Coming up next, the Tom O'Brien Show from 4 to 6. I'll see you back here tomorrow on TFNN for another edition of Breakout Investing, 3 to 4 Eastern. Have a great afternoon, folks.